Now, today is Tuesday. After avoiding Monday, like I earlier said, for clear directional bias, now we have lineup of core economic data. The lineup of core economic data are still going to play a dominant role in shaping our directional bias. And the first that comes up today will be the core retail sales. So we look at core retail sales data points and see how that affects us and shapes our trade directional bias, which is very important for us at the moment. So we started to use the line chart as local 3 hours. So we have an affirmative for 3 hours for now. After looking at price action for 4 hours and 3 hours, we try to settle for 3 hours. 3 hours and 3 hours time frame with time. So we continue to see that price is making good share attempt on ascending trend line. We have a weak rejection point that is 10 to this level. So already I know. So that was why I kept it here so that price will continue to move this. So we have a leverage situation here where price will leverage on the breakout of the descending trend line as a foundation for uptick. So here price continues to find a bullish footprint that's so price can return here and also. So what this means in technical that price can return itself here and then come back because here we have a breakout from the descending trend line and we have a chart pattern with a symmetrical triangle price is broken out. So what we see here is that the market is awaiting economic data. So we look at the effect that comes up today with the core retail sales and the retail sales. Why does this matter? The core retail sales are important to us because it actually it looks at the values of sales outside automobile, the retail sales outside automobiles, which are also the primary gauge of consumer spending. These are facts that the Fed will have to use and look at it critically. So it's very important to us at the moment because it looks at the change in the total value of sales at the retail level, which excludes automobile, and it's usually released after 16 days, in a month. So every after 16 days of the month, we have a core retail sales, which focuses more on retail. That's retail sales excluding automobiles. So it's important and it matters a lot to us. And it's also a sign and a primary gauge of consumer spending. You need to see how much people are spending in retail stores. So it's a gauge for uh, primary for spending. We look at how people are spending money primarily, and it's very important in which account for majority of overall economic activity. So we keep that in mind that core retail sales will be coming and the retail sales will follow after by 3:30. So these fundamental analysis are important and we decided to outline it and we will continue to carry them along in every chart so that when you look at my chart, you understand that you have fundamental analysis. So the worst day to trade is going to be tomorrow. Why is tomorrow the worst day to trade? Because federal fund rate, very important. So we'll talk about federal fund rate by close of today and what to expect from federal fund rate and FOMC meeting and how FOMC meeting will decide and shape the direction of the yellow meter. So we'll discuss that and on Thursday we'll have the final GDP and we also look at it after extensive in-depth search into what GDP is going to do and GDP data and we will look at unemployment claim and final GDP price index. And we will also look at what Philly Fed manufacturing index will into our table. So at the moment, let's look at the structure of the market and see how price is setting itself on a waiting list. It's awaiting the fundamental data. So if we see the quality coming in below expectation, that could be a bullish catalyst for SAU USD to print higher. So the price is awaiting economic data. But based on what price has been, a breakout from the descending trend line is a confirmation of the trend from downtrend to uptrend. So, but however, this cannot be the final assumption because fundamental analysis invalidates every chart and every technical projection. So what we continue to see is how does the data print comes. If the data print comes higher than expected and then the greenback demand falls, then we begin to see a breaker structure in validating our analysis. So it's been like this and it's been very critical, and every time we look at it from fundamental perspective as these things drive market and those strong sentiment. So we continue to watch what fundamental analysis presents, and the most important news will be the FOMC, Federal Open Market Committee meeting. We need to see what they say at the first week. So whatever be the outcome, we can actually come to a nearer conclusion of what the outcome of the FOMC meeting through charts, because the market sentiment reacts to Federal Open Market Committee decision. So here we have already decided this as a demand floor, here's a demand floor. There are weeks in this area, so we already know and we've done this chart many times, so we already mastered it. So if it doesn't come very close, don't ask why, because we already know there's a chart here. So we begin to see that if a price breaks out from here, we will normally return price to this level. So a breakout from that level, based on fundamental analysis, will first of all return price to this level. A return of price to this level is a buying level floor where price has always found a buying potential. So let's have it like this. So this is what will happen as price returns to this level. So it's more like a psychological ascending trend line where buying orders are already initiated. So to be on a very extreme side, if we have a more aggressive fundamental data that comes in favor of the USD, we have the year ending like this, where we continue to have a significant drop in the value of, let's say, USD. Well, I don't see that workable. I don't see that maintainable for now and in the future, as gold remains a top tier asset and it remains a very valuable asset. You don't see an immediate drop in the short term, even in the long term, for SLUs. So we continue to trade it layer by layer until we have cost to dump it fine. But for dumping of SLU, I can tell you it was something that was pretty possible. It is not like those things you never see that are not tangible. Gold is tangible. So what you see here is the price of gold in the world market. That is what it is. This is what gold price is in the world market. So when you think of dumping of gold, you think of its abundance, you think of its availability, and you think of its affordability. So there are many factors surrounding the dumping of gold. And the biggest question you ask yourself, who is holding gold? It's not an average person holding gold. It's always an investor. It's always a very wealthy person who uses gold as a stock value. So these are things that we must consider when we think of gold dumping. If you think of who is dumping gold, the central banks hold huge deposit of gold, use it as a hedge, to back up the currency. So it's not going to be easy to dump gold. That is the truth. So it is best to continue to trade it layer by layer, look out for correction and going long. Look out for correction and going long. But however, that doesn't mean that the market will continue to remain in this. So the market might continue to move in a sideways direction for a very pretty long time to come. So this is the structure we have for this USD. And let us look at the horizontal part if we have a strong resistance structure where we begin to look at price and we can see we have already beaten here at 2,724. You can see that beautiful price action after the breakup has came here yesterday. Look at it, line chart. I love line charts. So it's always good that you incorporate line charts in your strategy. You can have a normal chart. Let's say you have a glass screen. You can have one chart for normal bar chart. You have another chart for line chart. So both of them will continue to give you a clear direction of buyer, especially gives you the insight into breaker structure. It gives you the structure when it's broken out and you need to see it. And always learn to alternate time frame, multi-time frame analysis, especially on intraday, where you look at 1 hour, 3 hours, 2 hours, 4 hours. And they are sometimes scaled down to 30 minutes and 45 minutes. The reason is because there are certain price actions you are looking for, especially when you are looking for breaker structure. There are certain structures you will see broken in 30 minutes, you will not see it in 45 minutes. And there are some you will not see in 45 minutes, you will not see it in 30 minutes, but you will see it in 15 minutes. So multi-time frame analysis especially on intraday, is very, very important. And when we are looking for a longer term direction, we look at higher time frame, where we look at the weekly, monthly, and daily to draw a very clear directional bias. And when we have breaker structures at higher time frame, it gives us a clue as to where market is headed. So this is what we have, and you can see how price have reacted at this level. After price broke out from the structure, price came back to retest and dropping by over close to 1,000 at this level. So what this means is that institutional trading is different from retail trading. The reason is because they're very structural and practical, and they follow a systematic approach while approaching trading in the financial market. And they are not in the habit of jumping and jumping. Institutional traders are waiting for price at this level. I keep saying this many times because I know we already having a build up. So we want price to return to the zone. If price returns to the zone, then it begins to play in a chart pattern. So when it returns, it will look critical from our chart pattern, and we will announce the new chart pattern that we have. So you see we have here two resistance, we have here support structure, we have here support structure. So if price breaks out from here, then we open our heart to see if there's a possibility for a breakout. If price breaks out from here, then we have a retest and price comes down. So if price comes down here, then it becomes a fulfilled prophecy where this take profit is replicated. See this take profit. So if price returns here, it will be exactly a replica of what we have here. Yes, it will be a replica of what we have. So when we look at it again from another perspective, we can look at it in this way. Why is a full replica? Is that we take this and then we place it on the roof, and we place this on the roof, you see it fulfills the prophecy. So you can see it. So if you take that and you place it at that level, the price has fulfilled the range, the descending trend. So it feels good to see that we are following market structure by structure, and we also see how price propagate to this level where we have another breaker structure. We have here price build up descending trend line here, acting as a demand flow, acting as a demand flow, acting as a demand flow, break out of the demand structure, price came on retest, you see the week of this level and then drop to over 1,000 people. So it is critical to always see markets from structural perspective and not on a speculative oversight. So we continue to look at it the way it presents itself, and we take advantage of every position going for the ultimate trade decision. Here we have a roof price move for this level. You can see here as price continue to make its way from this level, you will see price build up at this level and then ultimately come here to reject at 2,780. So these are the ways that we approach the market, and we have here from a double top, we have here from a double top. So this price action started from here. We have here a double top structure, and this is the first retest of the open double top structure, and that price came from the neckline. So we have this. If you look here from the normal chart, you will find that price broke out from here and the break out from here and price retested. So what happened is that price returned and subsequently touched the neckline two times, and at that level price reacted here. You can see a reaction at this level. If you take the line chart out, maybe better understand it and see the price action the way it has reacted. So at this level you can see we now have a clear chart pattern here, and we're expecting a breakout from the chart pattern. So you can see this is the roof and this is the floor. So if you have a breakout from here, it opens the way to this place where we will be looking at it as a fake out. The price might come here and to be a final correction, and will return back. And if that fails, that is still fine. We have another structure at this level where we have a beautiful structure here. You can see it that at this level price is coming down here. Price can also come down here to react, where we see price coincidentally in parliament here. So here we have a double confluence where price will come and react and shoot up. So at the moment market is um, waiting for core retail sales data and retail sales data. The retail sales data shows indicator of retail sales, consumer spending, excluding automobile. That is important, and also a strong economic gauge, which the Federal Reserve team will be watching, and we want to use it on monetary policy change decision. So this is what we have here. And we have here, if you look critically here, you see price at this level, retest 8 hours. Very important time frame. Always going to incorporate it. And when we go your chart, you look at the most recent breakout. You see here we have series of breakouts here, but the most recent breakout is this. So that is why we have chosen this. And price return at 2,724, 2,727. We had that bearish push that walked over 800, getting to 1,000 people. So this is what chart is and how we interpret the market. Like an institutional trader, we don't do retail trading here. Our whole focus is to approach a strategy that makes you an institutional trader, so that in the future you have the capacity to handle heavy cash. We're looking at future capacity of $100 million fund management, $200 million fund management, $1 billion fund management. So the approach may be different. You don't jump into every trade. Be very patient and allow price to marinate. When price marinates, you come in for a big push and take away the bulk and go. So our strategy is the most orthodox, and we're not using indicators here. But I'm going to do a next analysis where I only tolerate one indicator. It's called RSI divergence. So I will also show you how to use RSI divergence strategy. We have spent time over a period of time to master how to use RSI divergence, and it's very fantastic. And it feels good to see you incorporate it into your trading journal.